Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about Alibaba stock, ticker symbol BABA, and how it is down about 35% in 6 months. What I want to do first is go into Google and talk about the news surrounding the stock, and then I want to go into the earnings report to talk about how Alibaba is doing as a business, and then I want to go into the trading charts to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So now let's get started. So here we are in Google, and here's a 6-month view of Alibaba stock charts here. And as we can see, we are in quite the downtrend, down over 30% in about 6 months. We'll talk more about the downtrend and the support levels in a later part of the video, but I want to talk about the macro reasons of why I think Alibaba has dropped. And obviously, if we scroll down here at the news, we see a lot of news articles about the continued crackdowns by the government, and it is obviously why we're seeing the continual drop in Alibaba's share prices. So the question is, what is new about this particular news headline that is causing the stock price to fall? And to answer that question, we first have to understand what this particular news headline actually is. We can see here in the article that the new regulatory rules forbid any companies to basically deceive their customers. The regulatory rules bans faking statistics or reviews to influence customers. Now, firstly, I don't know about you, but for me, I am perfectly fine with the concept of having rules in place that ban companies from lying to their customers. So again, just looking at this rule from an objective point of view here, if there was no rule in place that said lying was bad, well, now I'm actually fine with having a rule that says lying is bad. But the second part of the rule here is a little concerning to me. That part is talking about the data and algorithms. Our world right now is full of algorithms. You're watching this video right now probably because the all-powerful YouTube algorithm saw that you probably like watching stock videos, so they displayed this video to you. So I think more color has to come out from the regulators to fully understand what they mean by this. But if Alibaba is unable to use algorithms or data on its platform to engage the customers, to show the customers what they want, that could definitely be an issue. But again, I don't really think it's this particular set of regulatory rules that may be shocking the stock downwards. The thinking that China's government will squash these tech companies into the ground. That may be what is causing investor worries. And the fact of the matter is, investors should definitely be concerned with what is going on here with China's regulators. For some reason, and probably nobody knows the exact reason except for the president of China, for some reason the government continually wants to go after these companies like Alibaba and Tencent. And I do not think that the government is done yet. I would say that the government is still going to continually come out with more regulations, and that investors are still probably going to feel some pain. But right now, I want to get to my main point of the video, which is the question that, to investors, does this continued government regulation actually matter? And obviously the short answer is yes, regulation does and should matter. But my main point of the video is that the degree to which regulation matters to investments is dependent on the time horizon. In the short and intermediate term, yes, these regulatory headlines matter a lot because it makes the stock go down. In short term here, investors have the choice to not play in these names right now. Short-term investors do not have to increase their risk by investing in these Chinese tech stocks right now. But I am a long-term investor here. As a long-term investor, at least for me, I do not really care about what happens to the stock price tomorrow, next month, or in 6 months. For me, I care about what the stock price is a year from now, 3 years from now, 5 years from now. When I'm looking at stocks to buy, I have this in mind. I know that someday the regulatory pressures that the government is currently bombarding Alibaba and Tencent with will eventually end, and China's technology companies will begin to grow again, because I believe China will continue to grow, and that I think Alibaba's fundamentals will lend to a higher stock price than where we are right now. So as the stock continues to get pummeled, I am continually buying a few shares at a time, expanding my position slowly, because I see this as a buying opportunity for a very long-term investor. Alibaba has the name recognition, it is well known and has a huge customer base, particularly among the Chinese citizens. For me, I think Alibaba is just put in the timeout corner and not the electric chair. So with all that said, after talking about Alibaba's macro bull and bear cases, let's talk about Alibaba's fundamentals so that we can try to see how Alibaba is doing as a business. So here we are in Alibaba's most recent earnings report for the second quarter ending on June 30th, 2021. And firstly, in the short term, honestly, I do not think that this fundamental earnings report will make a difference on the stock price. In the short term, all that really matters is the regulatory headlines. But for long-term investors, it's always nice, and you should always look at the earnings report to see how the company is doing. And we can see here that top line revenues, which is this line on the earnings report here, is growing nicely year over year, about 34%. And this is really good growth rate for a company that is the size of Alibaba. And I just wanted to note here that I actually pulled out the earnings report from the same quarter in 2020, which is in this tab here, the one June 30th, 2020, and we can see that the top line revenues are growing year over year from 2019 to 2020, also at a 34% rate. And what this is telling me is that Alibaba is growing at a steady and apparently sustainable rate because they were able to maintain this growth rate for at least a couple years. And that is what I like to see in the companies that I invest in. Investors normally like consistency and predictability, and even though we are definitely not getting that from the regulatory headline side of things, at least we can have some predictability in terms of revenues here. So going back to the 2021, the most recent earnings report, if we continue on down to look at the income from operations here, we can actually see that year over year we are slipping in income from operations off over 10%. Now Alibaba does explain in the footnote here, which I pulled up in this tab here, that the year over year decrease was likely due to its investment activities, so they are spending and investing more capital this year than last year for growth. And that is a good thing because that means that Alibaba is still looking for new ways to grow. But right now that investment activity is impacting our operating margins here, which is going down around 10 absolute percentage points. And that is definitely not what I want to see in the companies that I invest in. Margins are important to me because margins show how efficient the company is doing. And when we see lower margins, I normally immediately think that the company is operating less efficiently. And if we look at the more detailed view of the same earnings report here on page 20, we can see it does look like Alibaba is operating a little less efficiently. We can see the top line revenues are the same as the ones that we saw above. However, on this page, they now list the cost of revenues here, which is this line on the earnings report. If we do some math with this cost of revenues here, we can see that our gross profit margins for 2021 are about 40%, while the gross profit margins for 2020 was about 45%. Again, this is likely due to increased shipping expenses or something, because we all know that the global supply chain is more strained than spaghetti at the moment. So this is not the worst thing in the world, but it's something to pay attention to make sure that these shrinking gross profit margins does not become a trend. Another thing that we can see from this more detailed view of the earnings report is the growth in sales and marketing and general and administrative expenses. We see that that is increasing, almost doubling year over year. Again, not something that I want to see. So if we go back to the less complicated view of the earnings report, and we can see here, even though our top line revenues here are increasing year over year, we are unable to keep that extra money. In fact, we are actually losing money, which we can see in this net income because of all those expenses and investments. So how do I think of Alibaba's fundamentals at the moment? Well, I'm a little bit neutral on the earnings report. For me, they need to prove that their investments into, quote unquote, high growth areas actually do pay off. But I do like the fact that they are at least trying to invest in these growth areas. I want to make sure that they are continually growing the revenues consistently, and I want them to continually work on their inefficiencies to increase these operating margins here. I think once these operating margins come back, then we will be hunky-dory. So after talking about the fundamentals of Alibaba, now let's head on over to the trend chart to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So here we are in Alibaba stock charts here, and we can see that we are right back to the health crisis lows of March 2020, back to this $170 level here. This level is important for Alibaba to hold, as this was the point where buyers had stepped in back when everybody thought the world was ending. I think this is certainly a level that buyers are looking at. However, the sentiment is extremely negative with Alibaba at the moment because of the regulation. If any more bad news comes out, we will likely be heading lower, perhaps to this low here around the 160s, or even this low here back from August of 2019, back in the 150s. So of course the question is, will this $170 strong support level break? And obviously nobody knows for sure, but take a look at this massive downtrend here, which we mentioned in the first part of the video here. Ever since our highs back in November of 2020, we've been making lower highs and lower lows. from the trend perspective, this thing has the momentum of a freight train. So going against this trend is like standing in front of a semi-truck going 60 miles an hour and expecting to stay standing. But with that said, obviously the trend has to end at some point. For me, because I know I'll never pick the exact bottom of a stock, I'm always slowly edging my way, averaging my way down into a position. Slowly and steadily, as BABA hits these key support levels here, I'm buying a few shares at a time, expanding my position by just a few percentage points at a time. But again, I'm doing this because I believe in the stock long term and because I believe that China will continue to grow long term. If we scroll back in here and look at the MACD here, which is this chart over here, we can see that our short-term momentum is grossly weaker than what we are normally seeing compared to our long-term momentum, which is this orange line here. This is bearish for Alibaba. We would like to see the short-term momentum of the blue line here at least bottom out and work its way so that the derivative is positive, or in other words, we want this blue line here to be edging upwards. If we look at the RSI chart here, which is the relative strength index, we can see that we are clearly oversold as the value is below 30. And this is normally a trigger for some algorithms to buy the stock. So to me, technically, even though we are in this massively bearish downtrend here, with a weak MACD and with the bearish overhead macro news of unknown regulatory announcements, there could be an argument to pick up some shares if you're a long-term investor because the RSI is oversold. But again, remember, investors do not have to play in this stock at all. There are countless other companies out there with much less risk. For example, you got GM, you got Ford, Walmart, and Home Depot. I would say take a look at those stocks before considering Alibaba. And if you are to consider Alibaba, carefully consider the regulatory risks and other risks that are here. So that was my review on Alibaba stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.